Hi guys, welcome to Crypto Insight. In these videos, I give you a rundown of what's happening in large cap crypto, and in particular, the options and volatility space. I started trading crypto options in 2020 after spending 20 years trading equity derivatives professionally. It's been a lot of fun trading the massive volatility in Bitcoin and Ethereum. And I can tell you as a vol trader, the markets with the most opportunity to make money are those that know how to move. I will give you the insight of my trading and experience and how I'm reading the options market flows and positioning my own book to trade the opportunities in the space. Don't forget to like and subscribe to the channel if you like these videos, and hit the notification bell to see these weekly videos as they are released. Thanks a lot and enjoy the video. So what's going on in crypto? So we had flagged last week that, Bitcoin was respecting the technical levels here. It seemed found a bit of resistance around this 47,000 area, which if broke was likely to kind of head towards the next key resistance around 51. We haven't managed to break that. We've been kind of stalling at this level, bouncing around, but we haven't managed to break that 43 support on the downside either, right? So that seems to be where we are right now. Kind of on the downside, you'd look for 43 to act as support. If we can manage to break above here, we're probably going to find resistance in that 50 to 51 area, basically. Yeah. In terms of Ethereum, the similar kind of levels would be, this 30-50 on the downside in terms of support zone. That's kind of held for now. And the level we need to break on the upside is going to be 33.70. Yeah, we had said that there seems to be a bit more of a bullish setup for Ethereum in terms of how much it could rally. If we are going to get that break in Bitcoin towards 50,000, then, wouldn't be overly surprised to see Ethereum stretch as far as 4,000. Looking at the cross, we see, that cross is kind of broken its downtrend. It's been kind of flatlining, hasn't really accelerated, but no reason to believe it can't head towards this kind of next area in the 0.08, provided it stays above that 0.065 region, right? So that's what I'm looking at basically on that cross. If we break 0.065, then, that kind of bullish short-term outlook for Ethereum is kind of dented a bit. But whilst these levels kind of hold in the cross rate, then still looking for Ethereum to outperform on the upside, basically. Yeah. For me, I'm still running, as you know, I've got my call switches on. I've kind of been restructuring it a little bit there. I've been long August calls and September calls on Ethereum versus short in Bitcoin. I've rolled half of my August Ethereum calls into September, just to keep them alive for a bit longer. And I'm planning to roll the balance. For now, I'm rolling as opposed to taking profit because, like I say, that for me, the bullish outlook is still intact in Ethereum, given what's been going on in the NFT space. Yeah, NFT volumes are absolutely exploding, right? And last time we saw Ethereum really go crazy to the upside was partly due to this explosion in NFT volume, right? So I'll show you a chart. OpenSea is the NFT marketplace. And if you look at the kind of volumes there, over $1 billion in cumulative NFT volume, right? And that's how it's grown since January. So you've gone from literally nowhere to $1 billion, and that's a pretty steep curve, right? So that kind of, provided that type of interest in NFTs remains, then that's quite supportive for Ethereum, basically. Yeah. Where else? So that's kind of where we are, Ethereum and kind of Bitcoin price outlook in the short term for me. Looking at the kind of on-chain highlights, still seeing hash rate recovery. And And the miners, you look at the miners, their treasuries are growing in terms of the coins that they have. There's an increase in miner revenue, particularly if you look, compared to pre-May levels, where May was the big crash in hash rate and miners moving out of China due to their kind of clampdown. If you look at that, mining revenue has recovered. Mining revenue per hash, if you factor in the reduction in miners, basically, that's gone up a lot. So that suggests that, as competition for mining has reduced, the amount that miners can make from that activity has gone up. So that kind of means the market is kind of healing, basically, right? The idea being that it's a self-correcting and robust system that has kind of, gone through that shock and is kind of healed, right? And now it's quite attractive for miners to do what they do. And likely it is more miners are going to come back online as those revenues stay where they are, or even if they go higher, right? So, it's quite good to see that system healing itself with no, government intervention, right? You couldn't say the same about equity or bond markets being quite so able to, withstand a shock and heal themselves without any government intervention, it seems, right? So that's quite encouraging for the space, I think. Yeah. The other thing on-chain exchange outflows continue, showing more coins are going into self-custody, i.e. more hodling type activity going on. So, that accumulation and people taking stuff off exchange continues. If you look at the data there. And then short term, this is an interesting metric. I'll share the chart on this one. So something people look at through Glassnode, obviously, which is the main sort of source of this on-chain analytics, is something called short-term holder NUPL, right? So you're looking at the kind of P&L, the unrealized P&L, let's say, of short-term holders. So people who've been holding Bitcoin for less than like 5 months, okay? And if you look at this chart, you can see that that red line is basically showing that their P&L. So that had a big dump down to like 50% basically, right? So they were down 50%, which shows that a lot of short-term purchases happened when the market was up high, near the highs basically. And then we dropped by about 50% down to 30,000, right? So they were all massively underwater. And now you had this big recovery, right? So that's basically saying that short-term people who've bought Bitcoin have gone from being massively underwater to being just slightly in profit now, basically, right? So that's, the question now is, do those people now breathe a sigh of relief and get the hell out of Dodge, basically, right? Get the hell out because they're back to break even. So the idea just being there that then we're at this point where there might be a decent amount of short-term supply where people are just breathing a sigh of relief and happy to get out. Right now, they're probably not going to get out if the market holds, but if the market kind of starts to trade back down again, then you might get those people kind of exiting, basically, right? So maybe the idea being maybe we're going to that's going to provide some short-term kind of cap on Bitcoin price. If you look at that metric and you think that metric's got any value there, basically, right now, these guys are saying that metric is a sign of either, yes, it's a sell the rally where those people get out, or there's like, it's the start of a little bull run or a rally. I don't know what the justification there is, basically, but I would just see it as potentially providing some short-term resistance in price for Bitcoin specifically, because you can see that metric. And, that psychology of when you go down 50% on a position quickly, if you get back to break even, you're kind of likely to take your money out, basically, for those people who can't stomach that amount of volatility, basically, or who weren't expecting that amount of volatility in the short term. Yeah. So that's kind of my sort of read on that. Okay, but that's enough on the on-chain stuff. Now let's go to the volatility side. We go to the vol. Okay, so if we look at the volatility analytics on Bitcoin, first thing to say, what's realized vol doing? So realized vol, if we have a look, 30-day, 10-day, 60-day, 90-day. So, the longer dated metrics aren't doing a whole lot, right? They're kind of drifting very slightly lower, but they're quite stable. It's really the short dated over the last week has gone from like 63 realized to 53. Just dropped by about 10 points, which in Bitcoin isn't a whole lot, to be honest, right? So, but market cooling, as we've seen the price action, we hit that resistance at 47,000 and we're kind of consolidating, right? So we're cooling off in realized, and we're seeing that in the short dated realized, but the longer dated realized isn't doing much because that still contains some past price action, the big break back higher, or if you go even further back where you've got the 90 sort of numbers, they contain, you know, like maybe the May action where we sold off and stuff, right? So realize slightly drifting lower. If you look at implied vols and what they're up to, you know, they are drifting as well, but certainly holding up much better the more longer dated you look, okay? So you can see all of these charts drifting lower, the short end particularly drifting lower down to like, you know, the 70s, mid 70s from sort of low 90s. Whereas you look at the kind of 6 month stuff, that's kind of been around 100 and it's still at around sort of 97. So really longer dated vol holding very well, shorter dated vol coming in, right? And that's kind of best seen in the term structure graph where if I expand it, so you can see it better. Here you've got this kind of where you had September up at 98 and you had like the longer dated stuff at 100, 102. September's really got whacked. So it's back, September's below 90 now. Look at August, August is below 80, right? So a real collapse in the front end where we've got into that steep contango, which we know is the more stable shape of the curve, right? The back end holding very, very well. You know, if you look at the March stuff, still at 98, right? So, you know, that's really signifying that the longer dated options market has got a lot of demand, people seeing massive upside and wanting to probably reflect that through optionality, basically, which is like creating a bid to that stuff. If we were to stabilize for a month and kind of realize was to go back to kind of stay around 50, let's say, then I would expect that back end to come under quite a bit of pressure and maybe give up a good 10 vol points or so, right? But for now, it's really being driven by the front end collapsing. Yeah. Okay. And then skew's not doing a whole lot. Skew, you know, had flipped towards call options. We look at skew here, bring up sign of the 90 days and the 180 days. Again, I'll do a full screen on it. You can see here, you got in the short dates, 1 week to 1 month stuff, you got 5 vols over for calls. In the 3 months, you got 8 and 9 vols over, and in the 6 months, you got 11 vols over. So still, but that's been pretty stable over the last week, right? That hasn't really gone very far. I mean, you can see that we're kind of where we were. If anything, the calls have given a little bit back in the longer dateds. But basically, you know, the super short dated is kind of where it was. So no major story being told by the moves in skew. Yeah. In terms of the street positioning, for those who care, the gamma street positioning in Bitcoin is kind of showing us that, you know, most of the street positioning is kind of focused around the where we are now, basically, right? So the 45 to 50 area are where the biggest kind of spikes are in that gamma positioning, right? So how much information is in that really? Not sure, but you know, we're only about a week out, we're about 10 days out from expiry, right? And this is showing you a peak in gamma positioning at the 50 area. That would suggest we may well be headed into that 50K region for expiry, basically, right? So let's keep an eye on that. But for me, that's kind of saying, yes, likely it is for the next 10 days, we're going to be bouncing around in this sort of 5,000 point range between 45 and 50,000. And we're probably not going to break that in a meaningful way before the end of August, the expiry date, basically. Yeah. That's kind of how I would read that on Bitcoin. And then if you look at Ethereum, I mean, the only real thing to say on that is vol spread remains 15 vols over. It's kind of a similar story as we've been saying. I I'm seeing like, you know, the volume's very skewed to the call side of things, basically, right? So, you know, we're looking at, if I share this chart here, you look at the block trades that have gone up, you know, let's say even in the last 24 hours, that's how they're skewed, right? So calls, buys and sells, 8,000 and 6,000, and then puts are like one and a bit. So a massive skew towards trading call options. Yeah. So that kind of tells you where people care, basically, right? So that's one thing I would say. And then the last thing I'd say on Ethereum as well is if we look at the same story, if we look at the gamma exposure on Ethereum to see where the kind of concentration is there. And so on Ethereum, you've got, let's shrink that down a bit. Oops. Let me expand that. So this is a little bit of a different picture to what we saw on Bitcoin, right? Oh, am I actually sharing this? Yeah, I think so. So you can see that whilst Ethereum's hanging out at around 32, 33, and that is a bit of a spike in the gamma, you've also got relatively decent spikes at 35, at 4,000 and at 5,000, right? So that's basically saying that a load of out of the money calls have been bought as well in decent enough size that they're providing quite a lot of gamma exposure, basically. So whereas you had much more of a peak around kind of here in that 10% range between 45K and 50K on Bitcoin, that was your gamma peak, and then it just sort of tailed off. You could argue that you've got a much more uniform distribution of the gamma positioning in Ethereum, where you've got these big spikes all the way up to 5,000, right? So that's just telling you that the setup's a little bit different. And certainly the way the market participants have reflected it in terms of the size of short-dated optionality that they've bought it all the way up to 5,000, right? So just kind of giving you that sort of indication that the option market agrees that the short-term upside, like I was saying, I think Ethereum can head to 4,000 if Bitcoin heads to 50K. The market's confirming, or the options flows are confirming that they kind of agree with that, right? That's where the options activity reflects that there is more short-term upside in Ethereum than there is in Bitcoin, basically, right? That's what it looks like to me, and that's kind of how I would show it. Yeah. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.